Welcome back, everyone. We're talking investment saving strategies here with Justin G., the managing partner at JHG Financial Advisors. And so let's talk about this. This stresses a lot of people out. A lot of people confuses people about diversifying. Where should I put my money? Where should I not put my money? How do I, make the best decisions? It's very confusing. So you're going to try to make it simple for us. So what are you talking about?
Absolutely. Let's break it down.
Let's break it down.
We hear a lot about diversification and asset allocation, but do we really know what it means? And I tell you, I've got a great analogy that I use with my clients. It really kind of resonates well to understand it.
Okay, let's do it.
All right, so let's say that you are flying with your peeps out to San Diego or what have you, big trip, see a Panthers away game, and you look out on the tarmac and you see two different choices, and they say, Ben, which would you like to fly on, the Cessna or this Boeing 747?
Right, I would obviously pick the Boeing 747.
Why would you do that? Why would you pick that one?
Because it's bigger, nicer, probably more safe.
It'll probably get you there quicker, but you really hit on the main thing.
Yeah.
It's safer. Let's say that this falls off right there. You're in trouble,
We're in big trouble. Yeah.
Well,
but I don't know how to swim.
You can get to your next landing strip if one of these explodes.
Right.
In fact, there's a movie right now kind of about that, right? So, you want to drive your portfolio with multiple engines too.
Okay.
Large, medium, small, bonds, cash, international, because that kind of mitigates the air turbulence along the way, the volatility.
Right. So you don't want to basically don't put all your eggs in one basket. Is that the idea?
That is correct.
Okay.
That is correct.
So talk a little bit about talk about this as far as how do you know whether to short long-term bonds versus going into stocks and so can you talk a little bit about that?
Sure. So here's kind of a generic asset allocation model, and some of these could be bonds or cash or large, small, etc. And it really depends on what the time horizon and or the objective. So if you're in retirement, this might look different, and you might have a lot more in stocks in this area.
Okay.
And then, of course, if you're just saving for, I call it HVAC money, something that might go wrong, your car breaks down, maybe to buy a new car, then you probably want more bonds and cash and that type of thing within your mix.
Okay. You've been doing this a long time.
22 years.
So let me ask you, what is the biggest thing, the biggest piece of advice you would give people that are starting out? Again, it is confusing. I'm in that too, where it's like, I kind of get it, but usually I would just let someone like you do that. So what is the biggest thing you would tell someone before they start looking into doing something like this?
Well, I think, you need to do your research and get comfortable with it a little bit at a time. I don't think you want to jump right in and go all stock portfolio, or conversely, with interest rates really low and can only go one way, you probably don't want a lot of bonds in there because those act inversely.
Right.
Right.
Would you recommend getting help? From coming to you, you guys will be able to kind of sort through the waters there, right? That's a good advice.
Absolutely. I think, having some advice, doing some research on your own, and then, talking with someone. If you've got a 401k, more than likely they're bringing someone in to help you with that, once a quarter, once a year. So that's a great idea, is really, talk with someone like myself that has had 22 years experience, has seen ups and down markets along the way.
Yeah, perfect. All right, so again, this analogy here, basically, people would pick this because it's safer. It's got, if you lose one thing, you've still got another. That's kind of the idea, and that's your recommendation is don't put everything into, you say.
That's right. You don't want to drive your portfolio on a single prop plane.
Right. That's never the best idea.
That's correct.
All right.
Diversify.
All right. We have got his information in this segment and a couple tips from him on WBTV.com, his contact information on there as well. It's complicated, but hopefully this simplified it a little bit for you. It's important information, so I appreciate you coming on and spending a little bit of time with us. We will be back in just a minute.